Hey, ma'am. Good morning, ma'am.
Good morning.
Ma'am, Kalyan Jewellers in 400 quantity and average price 550. Current level loss 21,000 loss, ma'am. Seller road, ma'am. Please technical analysis, ma'am.
Okay, and I'm hoping it's a 6 month view that you want on this counter.
Yes, ma'am.
Okay. Rajesh, this is for you. Kalyan Jewellers is the stock in for around 21,000, correct if I'm not wrong. What is your view regarding this?
So the stock is currently trading at the buy point itself, and we are not expecting any major outperformance in the Kalyan Jewellers. Maybe it can bounce towards 535 levels, but the counter from the jewelry space that we are liking is Titan. If we see the weekly chart, the stock has been consolidating since last 6 months, but now it is coming out of that zone, and possibly the stock can outperform and move towards the levels of 4,000. So I would suggest to avoid Kalyan Jewellers because it's underperforming and there are no major signs of outperformance, but can switch to Titan, where we are seeing strong potential in the near term.
Okay, all right. So that's with regards to where Kalyan Jewellers stands. We've got our next caller. Prasad is calling us from Hubli. Prasad, hi, a very good morning to you. How can we help you today?
Yes, very good morning. Nowadays we are getting the accurate, almost accurate predictions and all the suggestions from NDTV Profit thanks to that. And my question is, I'm holding the 15,000 shares of RCF since 2 years. So
Okay.
what should I do? Whether should I hold or sell?
And what is the kind of time period that you're looking at, Prasad?
Yes, I'm looking up the time frame for another 1 year.
Another 1 year. Okay, then I'll take this up with Samir quickly. Samir, your view on RCF?
Yeah, he's already spent 2 years in the stock with no kind of return.
Yeah.
Now, even if the stock does give a return of 10 to 15% over the next 1 year, you're walking out with absolutely mediocre returns on a CAGR basis of close to 4%, right? So for me, fertilizer is a great space which will do well. RCF is also going to be one of the counters that will, but the fact remains that do not expect it to be like a exceptional return kind of a story, great upside. So if he's okay with the 10% in the 1 year, probably one can stay invested in RCF. But otherwise, I would say there are sectors and spaces in the consumption space, consumers, which will do extremely well over the next year and a half, given the fact that the GST cuts have happened, the tax cuts have happened. For me, I'd much rather take such a large sum of money that he's invested about. You're talking of 15,000 shares into 150. You're talking of over 25, 27. I mean, it's a huge amount. So that could be spread amongst 4 or 5 consumer stocks, especially QSR, clothing retail, FMC, not FMCG, but discretionary spend kind of play, and that can give far better returns. So for me, it's a sell, but if he's okay with the 10% return, he can hold on.